Welcome to the Stay Ready Real Estate Podcast, your action plan for real estate success. Here, we stay ready. Staying ready is being mindful of time and actively doing the things on a daily basis so we stay prepared for the opportunities that come our way. Join your host, Emeka, as he dives into the world of real estate investing, interviewing experts and sharing actionable insights. If you enjoyed this podcast, please subscribe today. We would love to know each and every one of you. So please go to GobannaEquity.com and click Invest with us today so we can figure out how we can get to your investing goals. All right, Bishoy, you want to tell a little bit about who you are and what you do?
Yeah, thanks for having me, Emeka. I'm honored to be on the show. And so my name is Bishoy Habib. I am a real estate attorney based in Florida here. 12 years into the practice now. All I've known really is real estate since I was a kid. So I decided to practice and become a lawyer. I also do some investing and, I focus on real estate, business, and I have a law firm that also handles litigation and estate planning as well.
No, beautiful, beautiful. So you're an attorney and now you're in real estate. Why did you choose this way? I know you say you're from a kid, but you never wanted to, fight crime, fight the bad guys.
I kind of grew up in real estate, so I used to watch my dad drive around to his properties, drive with him, and I was the only one in my family who was not a doctor, actually, as the son of immigrants, Egyptian immigrants. So I know a lot of different cultures can relate. I know there's a lot of Indian people who feel the same way that you got to be a doctor, a dentist, or a pharmacist, or you failed. And so I was in that category of you failed, but half tongue in cheek. But, I decided it just wasn't for me. I didn't like it. I wanted to make my own destiny. I like how my dad created his own schedule, his own agenda. He was just his own boss. And so I thought that was neat. I always wanted to do that. I got out of school in 2000, decided to do law school. I thought it'd be cool to have the degree. And then when the market crashed while I was in law school, I got out in 2012. And at that point, I was like, well, let me just go practice real estate law. So I moved up to New York, worked for a big developer up there doing hotel deals. Phenomenal opportunity for me. Really opened my eyes to what real estate could be on that scale where you're doing, you know, 8 and 9 figure deals. And after a few years, I got my license in New York. I decided to move back down to Florida for personal reasons, family reasons. And then I just stuck with the real estate law. And one day you look up and it's been 10 years and you've gotten really good at it. And you can help people in ways that they can't help themselves. And so I started my own law firm and here we are.
No, that's amazing. You said you invest yourself as well. How has managing the investments and the law firm, how's that going for you?
It's been good because it gives me a good perspective. And I think that a lot of attorneys, especially non-real estate attorneys, they don't really understand. So what I tell my clients is there's inherently going to be risk in any investment you make. My job is not to completely say there's zero risk in what you're doing because if you're investing, that's pretty much impossible, right? My job is to mitigate that risk as much as possible. And when it's not possible to mitigate that risk, it's to explain to you what the risks are and let you make a decision as an informed client and informed investor whether this opportunity is worth the risk or not, right? That's of course if you bring me in on the front end. If you bring me on the back end, then we're dealing with a crisis and I can only help you so much. And that's why it's important to have an attorney on the front end. But it's helped me really put myself in the shoes of an investor. A lot of times I pride myself on being a deal maker. And the reason is a lot of times attorneys are known notoriously to kill deals. Why do they kill deals? It's because they don't understand them. They don't understand the concept of the risk. They don't understand what risk adjusted returns are. They don't know what the market, what kind of investments are out there in the market. So it gives me a leg up in that sense. I'm able to communicate effectively with my clients, and that's why my clients love me. That's why I'm very much inclined to work with investors, lenders, developers, people who are in the space who are out there actively, seeing the market every day, being involved in the market. And I think that, resonates with my clients.
No, I love that, especially if it's, 8 to 9, figure deals. You gotta be, you gotta be good, quite frankly. I mean, you don't want to mess up and mess up millions for somebody because they'll put a bad taste in your mouth. Can you talk about the different strategies or the different things that you look for specifically, depending on how big the deal is, from, 1 to 4 units to 5 to 100 units? Because I'm sure there's different levels of the paperwork and the contract that you sign.
Typically, if you're doing a 1 to 4 unit, it doesn't mean you're a beginner, but that's a good place to start if you're a beginner, and more likely you're kind of on the newer end of the spectrum. And if you are, you have different concerns. You may not be super concerned about taxes yet, right? Because you're newer, and so you're not making so much money. So probably what you're more concerned about is, just getting everything signed, just making sure that your name is not personally on there, making sure that the loan is approved. You have a kind of a different set of concerns. If you're buying 100 units, chances are it's not the first time you've owned real estate. Chances are you do have pretty big tax implications from how you structure the transaction. Chances are you have other assets. And so, therefore, the asset protection aspect of it, right? Whether we use trusts, whether we use out of state LLCs, whether we use registered agents, third party registered agents, all of that comes into effect, as well as how we structure the transaction. So you really have different needs depending on where you are in the cycle of being an attorney, excuse me, of being an investor. And I think that's where, having a good attorney to understand what is most important to you. Because at the end of the day, you can't have everything, right? You can't have the best tax. You can't have, the lowest tax bracket and qualify for the best loans and have the most protection and have, all the flexibility. I mean, it just doesn't work. So you have to understand what is the most important to you. And then my job as an attorney is to make sure that we're focusing on those areas of need for you as an investor.
That's amazing. I love how you said that, because I would say that a lot of people would think that you need to talk to an accountant for that. Is that not the case, or do you work closely with basically the entire, the title companies, the accountants, anyone involved in a real estate transaction?
Yeah, 100%. We love dealing with the accountants. We do, because I don't give tax advice. I know generally I can give you general ideas of what's good ideas and what's bad ideas when it comes to taxes. I don't give tax advice. It's very specific to everyone's situation. Everyone's tax situation is very complicated, at least with the clientele that I deal with. So we encourage conversations with CPAs, with tax advisors, with wealth management. And those conversations, I mean, I just got off one this morning and it was it was a very good conversation because we kind of got to the bottom of it, because the client was trying to relay this to me and relay this to them and kind of playing phone tag, and the client doesn't understand. He's just relaying the messages. And so to put us all in one room actually was very productive. And there's a mutual level of respect and understanding. And hey, listen, I don't know about taxes, so why don't you educate me on this? And they don't understand the legality, so I educate them on that, and we find a conclusion. So it's actually a very, very good idea if you could bring us both in the same conversation.
Oh, beautiful. And let's say I'm the investor that, I just sold, 4 multifamily units that are quadplexes, and I'm ready to take on something big. And I'm ready for an attorney like you. What is something that you see that people misstep, that they miss, or that what's the biggest mistake in contracts that you see from different firms, or what is something that you specifically tell people to look for?
So, first of all, I would hope that you're going to do a 1031 exchange with that, right? You're not going to eat those taxes. So, in that case, I would tell you, before you actually sell, push the closing date a little bit so you can identify some properties. That's more of a tax thing, but that's just kind of pretty high level. It doesn't take a tax person to know a 1031. In terms of the contracts, if you're a buyer, obviously we're gonna look at different things if we're buying versus if we're selling. If we're buying, some of the most important things, specifically in the PSA, the purchase and sale agreement, we're gonna want to make sure that first and foremost we have adequate time to do due diligence, right? And the reason that's important is because, with commercial properties, anything could come up. It's not like a residential transaction where there's only a finite amount of things that happen. With the commercial space, it really could be anything. It could be an issue with zoning, it could be an issue with environmental, could be any number of issues. So we want to give as much time for due diligence as possible. And the reason that's important is because during the due diligence period, typically you're able to cancel the contract at any time and get back your deposit. So we want to mitigate the risk and give you an opportunity to really get as much information as you can. So that's a simple thing. Getting more nuanced, I would say the reps and warranties that the seller gives, reps meaning representations and warranties that the seller gives in the purchase and sale agreement, those are very hotly contested between attorneys. That's one of the biggest things we negotiate as attorneys. So if I'm on the seller side, I'm going to try to minimize those and make them as little as possible. If I'm on the buyer side, I'm going to want to make the seller make as many representations and warranties as possible. And that means that, everything is the property is in conformance with all local zoning laws, that we don't know of any violations on the property, that there are no environmental issues on the property, right? That we're in compliance with all laws on the property. So we're going to try to make it as much as possible that the seller is giving us, so that if anything were to happen after the closing, we can go back and say, well, you told us that this, and that, and we relied on that representation. So that's something that is very important that you wouldn't know if it's your first time negotiating or if you don't have an attorney.
That's why they need someone like you, someone who also invests yourself. So can you tell us a little bit about like what investments that you have in your portfolio?
Yeah, so for me, I have always been involved, and I say always, I would say since I was like 18 or 19, have been involved in kind of limited partnerships, passive investments. They always made sense to me. And when you kind of get in bed with a sponsor that you trust, and a sponsor just means like a general partner that you trust, it makes life easy. And once you build that rapport, it's not like you're vetting every opportunity. You are, but the biggest thing when I get a new opportunity is who is the person, right? If it's a partnership of some sort, the biggest question is always trusting that person with my money. When you build the rapport with that same sponsor and kind of roll it in, it just makes everything so much easier. You have faith that they're doing good deals. Obviously, you still vet the deals. So I've been in a situation where I've been kind of rolling money into funds and limited partnerships and things of that nature for quite some time. So that's really my first foray. I did some fix and flips. I hate them. It's not for me. So I get away from those. I got involved in some land entitlement. I don't do the land entitlement, but I invested with a land entitlement company during COVID. And for those who are not familiar with that, basically they take raw dirt, like a farmland, for example, and then over, let's say, an 18-month period, they get it ready. They get all the permits, they get all the zoning changes, they get whatever they need to do to get it shovel ready in order for it to go what we call vertical, right? So they may take it from, because if it's just farmland, you can't just build on it, right? You got to get it ready. So that process, say it's 18 months, but you could 10x your money in that 18 months if you know what you're doing. And so it's been a very lucrative opportunity, or investment, I should say. And then we have some other things that we got going on right now, looking into some Section 8 stuff, looking in the Midwest. So always looking, always looking. And I think we're going to have some really good opportunities here in the next 12 months. I think that we're going to see some pain. We've already started to see it a little bit nationally, and obviously, depending on what market you're in, I think things are going to get worse before they get better, despite an interest rate cut coming here in the next couple days.
No, I love it. And then did you look at any other investment outside of real estate where you can compare, maybe stocks to real estate or stocks to limited partnerships or flips, where you can truly say which one's the best that works for you?
Yeah, I don't know. I'm more attracted to real estate. I definitely own stocks. Some of them I've done very, very well with. Some of them I've done very, very poorly with. It's just, I don't know. It's just not for me as much as real estate. I can understand it. It's tangible. Listen, you can make a ton of money on the real in the stock market. And I have friends who trade options and make, tens of millions. I know they've made tens of millions of dollars. So I know you can make money in it. But for me, my mind just works better with real estate. And, I'm reading a book right now called The Psychology of Money. And half the concept of the book is just not trying to be greedy and just kind of like being patient with your investments, right? And they talk about Warren Buffett and how he's made like 80% of his net worth after the age of like 70, right? It's insane because the first like 60 years of investing, he did well. And then things just went crazy the last 10 years. And so I always think about that. the stock market, I feel like when I get involved in that, I kind of makes me a little bit greedy because you want to double your money in a year or 2 years. And, you might do that. You might lose it all. Real estate, you're never going to lose it all. I mean, unless you're over leveraged. But if you're careful and, you have a much less of a risk of losing it all. So
So if I'm a W-2 worker making, let's say, six figures a year, and I want to get into the real estate life, what are three actionable steps that you would tell someone right now to get started?
I love it. Well, I'll give you the first one and an easy one. Hit me up because I work with a lot of investors and I have a lot of people looking for money. But more important than that is finding a network or a group that you can go to on a weekly or monthly basis in your area, like a meetup. Just go there and learn and listen and observe and talk to the people who have done it. What I found is people are very friendly and they like to share. Now, you have to be careful who you're dealing with. You have to be careful because there are people who have ulterior motives, but vet the people that are there. Ask them about their experience. Ask them if you can learn from them. And in real estate, there's a concept called sweat equity. So people will basically give you a part of the deal if you come and do something like XYZ, like find the deal for them, right? Or find the money for them, or do some labor. If maybe you have a construction background, you can do some work for them, right? So there's ways to make money in real estate without putting money down. So I would say go to some local networking events, right? Number one. When you feel comfortable, number two, partner on a small passive investment, right? Maybe someone's doing a flip and they need some money on the construction, right? Maybe they need 30 or $40,000 and maybe you have that money and maybe you could turn that into 50 or 60 in 2 months, 3 months, right? Give it a shot. Vet it, but give it a shot. And if I got to give you a third option, like I said, hit me up or realistically, hit up like a real estate attorney or somebody who's in that world, who's connected with all kinds of people. And they can point you in the right direction depending on what kind of investments you want to make, how much money you want to invest, etc. I mean, I'm actually in the process of kind of putting together a fund right now, and it will be the second one that I put together. So, I love working with beginners. I love working with people who want to learn and make money at the same time. And that's really the win-win.
I love it. And with that, we're going to the next segment of the show where I ask everybody the same three questions. Questions one, if you could recommend two books for the aspiring investor to read, what would they be?
I mentioned The Psychology of Money. I think that's a good book just to teach you patience. I'm not a patient person. I like everything done now, yesterday. It's been a good book for me to kind of give me that patience in investing, number one. Number two, I read a book called Buy Back Your Time. I think it's Dan Martell is his name. Incredible book. The concept is that you want to only do things that are worth your time and then delegate and pay other people to do things that are not worth your time. So simply put, if you value your time at, $500 an hour, and I'm using an attorney example because it's simple for me, but if you make $100,000 a year and you break that down and that ends up meaning that you make, you're worth $100 an hour, then you should never be doing anything you could pay someone less than $100 an hour. Now, that's all good in theory, but you got to actually, how does that make sense? So like your bookkeeping, your accounting, the things like that that you can delegate to someone, admin tasks, things like that. You delegate those and use your time for higher level things, like going to these networking events that I referenced, for example. So it's a very important concept. We all have 24 hours in a day. Some people are billionaires. Some people have no money in their bank account. Why is that? Because the billionaires are much better at managing their time and delegating tasks.
What has been the most impactful speech or lesson that's helped you in your career?
Most impactful speech. Man, I listen to Tony Robbins all the time. I listen to Kobe Bryant all the time. Those guys fire me up. I would say those two people are very big inspirations for me. Kobe's somebody that, definitely inspires me a lot. And then as far as a lesson, I don't, I would just say just do the right thing, because if you try to take shortcuts, you try to cheat people, you try to do things you're not supposed to do, it will 100% of the time it catches up to you. I've never heard of anybody getting away with something over an extended period of time. You might get away with something here, you might get away with something there. At the end of the day, the world is getting so small now. Everybody's reputation is all over the internet. Just do the right thing, and I promise you will come back tenfold. And that's kind of what I've lived by, and it's been good to me so far.
If you can have dinner with anyone dead or alive, Who would it be and why?
You're the second person to ask me this week. I said the same thing. I mean, Jesus would be obviously a pretty cool answer. That's I don't want to say a boring answer, but a predictable answer. So I will just say my more fun answer. I'll say Eminem.
Why?
He's just is somebody that I've wanted to meet since I was a kid. I'm a big Eminem fan. He's somebody that definitely, I think it'd be cool.
I think he's leading in like all-time sales. I'm pretty sure he's linked diamond multiple
He's
times.
ridiculous. He's ridiculous. Yeah,
You
he's
gotta
got
write
he's
him a
got all
letter
those
like
records.
Stan.
He's
Write
he's
him a
got all
letter
those
like
records.
the. Oh, exactly, exactly. Now, what can the world do for you? What asks do you have? How can we reach out to you? Let the world know.
Yeah, so like I said, I'm an attorney here in Florida. I do real estate law, I do business law. So any of your real estate needs, any of your business needs, you're buying a business, selling a business, you own a business and need anything in Florida, I can help you with that. I have estate planning on my team as well. I have very good estate planners and I have litigation attorneys. So if you're in Florida, you need any of those services, I got you. And then if you're looking to invest, I'm putting together a fund, like I said. So that really those are the two things right now that I'm focused on. And if you want to reach me, I'm on socials. So at Attorney Bishoy, that's attorney spelled out, and then Bishoy is Bishoy, Instagram, TikTok, YouTube, and then I'm on LinkedIn on just under my name. My law firm's name is Levacy Legal, Lev like Victor, ACY Legal, Legal, and you can find my number on there.
Amazing. And I'll put that in the show notes. Well, Bishoy, thank you so much for joining the show and hope to have you back again soon.
Thank you, Emeka. I appreciate you having me on, man.